I'm doubly pleased to be here, not only for GE Ventures, but also, as Jim mentioned, I am a very proud Canadian, one of those transplants down in Silicon Valley now. So I'm thrilled to come back and see the progress that's been made, and the fact that this conference is even going on really touches me as a Canadian. So thank you again. So I want to touch upon a couple things. I want to tell you a little bit about GE Ventures, what we do, how we do it, and how we bring it back into the parent organization. But I also wanted to give a little framework for how we think about it and how you should think about it, and really why this is our time. And when I say our time, I'm talking about the people in this room. You are the innovation leaders. You are the venture capitalists. You are the leaders in your organization and R&D. And seeing the future, we are being asked to be the sensors, the tip of spear for our organizations in making sense of this crazy world that we live in today and help guide them through the future. And there has never been a point in history that your roles have been more valued within the organization. So I really think when we hear about this, we talk about it in kind of an, oh my God, technology and innovation, and it's scary. But for the people in this room, this is really our time to shine. And so I just wanted to frame that a little bit before I talk about how GE Ventures does it. So, you know, you've seen some of this before, and the interesting thing here is none of this is technology, none of this is innovation. This is just the stuff we deal with day to day in terms of business. You know, political, we've got what's going on, and this is over the past 18 months. You know, all of these changes in 18 months. We've got Brexit. You know, some of you might have heard we had an election in the US last year, that didn't go quite as anticipated. Economically, closer to home, we've got volatile oil prices, we've got cybersecurity attacks, we've got corporate scandals that we've seen. All at the same time, we've got record highs in stock prices, yet surprisingly, the IPO market remains closed. And then underpinning all of this, we've got cultural changes, both going on around us as well as within our organizations. We've now got millennials wandering around the office, and they text me in three-letter acronyms that I really don't understand a lot. We've got fake news that is actually news now. It's news that it's fake news. So we're dealing with all of this stuff, and when you stop and think about it, the pace of change has never been faster, and yet the world will never be as slow as it is today. The world will never be as slow as it is today. And that can be a very, very frightening thought, especially if you're a business leader. And that's why I say it's our time for the people in this room, because our job is to make sense of that change and guide our organizations through that change. So we started up GE Ventures about 4 years ago. In 2013, we created it. And we did a bit of a roadshow throughout the organization, and we started talking about digital revolution, and you heard Elise talk about that this morning. And when we did it, we framed it in kind of three buckets. There was the centralized to distributed. I want it here, I want it now, I want it myself. And I'm very pleased to hear that the LCBO now delivers. So that's centralized to distributed in its best form. CapEx to OpEx. You know, I don't want to spend a lot of money on big equipment. I want to buy it by the hour, by the mile, by the drink, by the kilowatt. And then static to connected, dumb to smart. I mean, the fact that I now get more emails from my kitchen appliances than my parents tells me we live in a connected world. But that was really the digital revolution, sort of as we started to all discuss it 5 years ago, and it's continuing to evolve. And we now frame it in digital evolution, the next phase of the digital revolution. And it's really moving from product and feature set. We again, categorized it in three broad buckets. Product and feature to service and experience. It's not enough to build the better mousetrap and have the better product out there. It's not about the product. It's how your customer engages with the product and how you engage with your customer, more than the product itself. Manual to autonomous. The product not only has to do what it's advertised to do, but it almost has to predict what your next need is and then satisfy that need before you even ask for it. And consumer to enterprise. Consumer has always been the bleeding edge of new innovation, and enterprise has usually been slow to follow. And it amazes me that I can sit on my couch and talk to my remote control, and then we go back into the office and we type away on green screens. And people are starting to say, well, why can't I have that experience that I've got at home back in the office? And, sorry, I'll go back for a second. One thing to remember with this is while it's technology that's underpinning this, the real disruption that has come has not been the technology, it's been business models. And if you look at the Ubers, you look at the Airbnbs, you look at some of these major disruptors that we all hold up as the models for disruption, there's nothing new there. It's not new technology. There's nothing proprietary. That was a new business model to engage with customers. And that's really where a lot of the disruption is going to come from. And our organizations are great at innovation, but it's understanding how customers use it more than just coming up with great products. So with that as a framework, we've also seen shifts in how companies engage in innovation and what the role of the venture capital group is. And I say venture capital group here in sort of the small VC letters. This is innovation, this is R&D, this is everything. But if you look 5 or 10 years ago and people talked about the corporate venture team, you said, well, are you strategic or are you financial? And I don't think you can separate those two and talk about one or the other. You have to be both. You know, you cannot be strategic if your companies go bust. And financial, the more you pay your way within the organization, the more freedom you've got to innovate and experiment. The second one is the biggest one. Venture capital used to be this small team of crazy people out in Silicon Valley doing stuff that nobody ever heard about. The role now is not the investment. It's not what we do. It's how we bring it back into the organization. And we spend a lot of time today talking about ventures, talking about innovation hubs and ways to access innovation. It is all meaningless if you can't bring it back to the parent company. It used to be fund and forget. You'd make a couple investments, you hope a couple hit a home run, and you know, you can wave the flag. In Silicon Valley today, you can get money just about anywhere. If you're a startup, you can get funded. That's not what they want this group for. That's not why they come to corporate ventures, venture capital. They want you, the other things that you bring beyond money. They want you to fuel and foster the startups, not just be an investor and annoy them, bringing execs in front of them every couple of months to do a roadshow. One of the biggest ones as well, tangible to intangible. It used to be about what are the financial results? What's your IRR? What companies have you found? How many have we bought? I think our biggest change within GE has not been the things we've invested in, the startups we've created. It's the cultural change that we have been engaged to bring about within the organization. And it's the intangibles, the way we think about things. Fail fast. It's okay to fail, actually. Milestone-based funding. Things that are par for the course in venture capital. We're bringing that kind of thinking back into the parent organization. It's that intangible that it's hard to explain to the corporate when they say, how's your quarter looking? And then finally, hard sell. We started up 4 years ago, and we literally spent the first 2 years just banging on doors and knocking our heads against the wall, trying to engage with the business units. And it was a tough, tough slog. And it seems like about 2 years ago, the switch suddenly flipped, and people were getting it, and the engagement with us started to happen in reverse. And now it's gotten to the point where we're sold out. We can't keep up with the demands that we are getting from the business units. Show us new innovations. Show us new thinkers in the market. What do you see 5 years out? We get pulled into every strategic thought process within the organization because, like a lot of places, GE long-term thinking is 3 years, and it's hard to make a 3-year plan when you don't know where you're going in 10 years. And so we're being pulled into that thinking as well. So you look at all of this stuff, and I want to bring it back and say, this is really the time for the people in this room. This is our time, and you really have to take advantage of it. So I'll touch upon a little about what we've done at GE Ventures. Again, we're only 4 years old, and it's a little remarkable at some of the progress we've managed to make. Within the Ventures group at GE, there's a number of things that fall under that very broad umbrella. And really, again, these are tool sets that we use. This is not our end game. These are the tool sets, but our primary mandate is to bring this back to the parent company, because if we don't do that, we are an island and we have failed. So we do venture investing. We've got about 95 companies in the portfolio. We've got a mandate to invest about $200 million a year. We do everything from seed all the way up to late stage. We've got about 25 or 30 investors, mostly in the US. We've got a team in Israel and people on the ground in China as well. Catalyst is a new business that we started up within Ventures about 16 months ago. And Catalyst, they hate it when I call it this, but this is really our moonshots program. This is the stuff that 10 years from now, 20 years from now, we know GE needs to be core in. And we have to start thinking about it today. And I think the best example is if you think about self-driving cars, and I ask you to name a company involved in self-driving cars, you're going to say either Google or Tesla. And that's because 15 years ago, they started putting investment into that space. Now imagine if that was Ford or GM, and the mind share that they would have in that industry today because of that forward thinking. Catalyst for us is the things that 15 or 20 years from now, we know they're going to be huge. We don't know what the business looks like, but we want people to think GE when they think about those products. And it's largely in healthcare right now, but we're going to expand it out to energy as well. New business creation, nothing has got more traction within GE than the new business creation group that we started up. And this is to create new businesses from scratch. GE, like a lot of large organizations, we develop a lot of technology, and it's almost build it and they will come, or we'll just hire a whole bunch of salespeople to sell it. And our new business creation group turned that on its head and said, no, we're going to find gaps in the business. We're going to find areas that we can make a difference. And then we're going to go shopping at GE for technology, and we're going to create businesses around that, completely separate from GE. If GE gets a hold of this, they'll kill it. So we are the protectors for these businesses, and the company has really gotten on board this, and the excitement and the enthusiasm and the engagement we've gotten from new business creation is probably 5 times what we get from any of the other areas that we manage. And then licensing, most of the corporate IP at GE is managed under the Ventures team now, and it actually ties in very well with some of the other things that we do there. GE has historically looked at IP, like a lot of corporates, as a defensive mechanism, protect my playground, protect my product, and they weren't looking at it offensively. And I don't mean like a patent troll. I mean that we were looking at IP for its single specific use, and we weren't considering other applications that we could go into without impacting the core use whatsoever. You know, we develop 10 times the technology that we can ever commercialize, and technology doesn't age well. It doesn't sit on the shelf well. And it was just sort of sitting and rotting. And we went and looked at it and said, well, what can we create businesses around? What can we commercialize? What can we take out into the market and add new revenue sources for the company? And that's been a huge win for us. And then finally, health imagination. I won't spend a lot of time on that. That's about thought leadership in global health and population health. So that's a bit of a background. I think with Jim, we'll get into a little more of the details. I'm also happy to take a lot of questions. And frankly, we want to expand the environment. We want every corporate to have a corporate venture group. We are happy to share our warts and all with everybody. I'm happy to talk about the failures that we've had, because you learn more from failure than you do from success. And any experience that you have had running into the corporate, in trying to get your group off the ground or get progress, I'm sure we have seen fivefold, and we've got the bruises to show it. So, and I'm happy to talk through how we managed to break through those walls. But I'll join James.
Wonderful, wonderful. Real tour de force.
Thank you.
Fantastic. No, it's really, no, you can sit there. That's good. Get a little bit of distance. We don't.
Try not to be offended here.
I meant to be interrogating you here, David.
You know, Roberto Bondar got a standing ovation. You're sitting 2 seats away from me.
It just gives a bit of distance. But actually, that was a really great insight into GE Ventures. And you mentioned just at the end there the sort of scars on the back, the lessons you've learned, particularly over the past 4 years. Perhaps we could start there. You've probably got a list of 30 lessons or tips that you've got. Can you summarize down the 5 most important ones? What would you give to the audience out there?
Okay. We didn't practice this, so. I think first and foremost, and somebody mentioned earlier, is to get buy-in from the highest level of the organization. And there are so many things that we have been able to do that we shouldn't have been able to do because we got Jeff Immelt's direct backing, and there has been no bigger supporter within GE than Jeff Immelt. I think Ventures got their picture in our annual report this year. He had us get up and present in front of the board of directors. There's not a lot of manager meetings that he doesn't admonish people, get involved with GE Ventures, and I think that plays a huge role. I think corporate venture groups, still the average lifespan is about 5 years. So, and a lot of times it will be created by the CFO or within a business unit, and then that business champion leaves. and you're kind of left hanging there. So I think it's vital to get highest level support from the organization is number one. I think second, everybody talks about strategic versus financial. It's all about the financial. If you are playing in the swim lanes of your business, you can tick the box on strategic. And what you really want to be looking for are the winners in that space, not the one that means most to my company. The one who's going to win in that space is the one that's going to be disruptive. So I think you have to be first and foremost financial, but within the context of strategic. I think it was interesting. We've seen a lot of corporates in the Valley get into venture capital, and there's a mentality, we dominate our space, and so I'm going to hang a shingle on the door, and all the deals that I could ever imagine will beat a path to my door. And it's not the way it works at all. In fact, the ones that beat a path to your door are probably not the ones you want to invest in. It's creating relationships, it's creating a reputation that you're here and you're here for the long term that I think is most meaningful. And then I'll do 4 instead of 5, if that's okay.
Go on, man.
I
That's
think
innovation.
one of the biggest ones that we've had to do was the mind shift within the parent company. And when they start up a ventures group, it's like, okay, we've started you up, we've funded you, here you go. What are you going to do for me? Show me these startups. Bring the money in. Bring the ideas in. Come on, what are you going to do for me? And the short answer is nothing. We're a $230 billion market cap company. There's nothing that these 10 guys in a strip mall are going to do for GE. And I think it's shifting that mindset, not from what can they do for us, but what can we do for them? And what is really disruptive is when these companies get traction and when these companies start to engage our customers, that it really becomes interesting. So we've had to turn it around and say, okay, what can we do to make that company successful? Because only if that company is successful will it really be impactful for GE. And that was a real mind shift. And so now we put in place programs for how to engage with the startups, what we can bring to them. We roll out our engineers into those organizations. There's a whole laundry list of things that we do to support them. But it was a real mind shift within the parent as to how we can help them and not what they can do for us.
Yeah, it's a great way of putting it, David. Thank you. I mean, in terms of what Dr. Bondar was talking just before, it's that idea of monoclonal thought, and I'm just wondering, Sue Siegel, who's CEO of GE Ventures, she was effectively a GE outsider. She was a venture capitalist. She hadn't done strategic investing in that sense before. Mm-hmm. How important has that been to the sort of GE Ventures and the sense of what you've been able to create?
I think it's critical, and I don't mean to offend anybody in this position in the room, but I think if you are trying to create a disruptive organization within your organization and doing it from inside out, you're creating an almost impossible task and a high bar. And Lord knows we did a lot of things wrong when we set up the group, but 2 things that we did right, looking back on it, I can say that, is one, we set up where we did in Silicon Valley, and whether you like it or not, it's still sort of the hub of activity in North America. And that sent a message externally that we're here and we're serious, and we're in this to stay. I think it was also important because we're 5,000 miles away from the corporate parent. So, we don't get people walking down the hall going, how's your quarter looking? How's your year looking? You on budget? This is a long-term business, and we need to think about it that way. And we need to act differently than the parent. The second thing that we did was we brought in Sue Siegel, and she was at a tier 1 financial venture firm. And she came in knowing nothing about GE. And I don't think we would have got as far as we did if she knew anything about GE. So, I like to say you can't take a bag of apples out of the fridge, put it on the counter, and say, you're now fruit salad. Tastes like a banana. If you've grown up in an organization, you know how to get stuff done in that organization, but the value that we bring to the organization is that we don't know how to get stuff done, so we just tend to take it head on and break through walls. And, it offends people at first, but I think a lot of people then go, oh, I didn't know we were allowed to do different things. Maybe I'll try that. And we wouldn't have done it that way if we started inside out.
That's a great way of putting it. I mean, you mentioned in the slide, I think actually you called almost a soundbite for the conference, "The time is now, it's our time." And I think that's a great one for this whole event. It's been amazing to see the sort of sense of reaction and responsiveness from the local community here. But you also talked in that slide about the sort of shift from tangible to intangible. And I'm just wondering, if culture eats strategy, then how do you go about changing and developing the people?
It's really, really hard. And, GE, we've got over 300,000 employees, and a lot of them have been there for a long time. And it's funny because, as much as we've done to change the thinking about GE, I still go home and my parents still think of it as appliances and light bulbs, businesses that we're not even in appliances anymore. And they think about the culture as, Six Sigma perfection, and you fire your bottom 10% of employees every year. That hasn't been the case for 15 years. So turning the mentality and the ship around is really hard. And we're trying to do it from the inside out. And I mentioned that we got a lot of traction from our new business creation group. And just to give an example, I think there's a culture within the culture that we don't recognize. And so we did a full day pitch out with our oil and gas, the heads of our oil and gas business, and it was sort of their top 10 people and ventures, and we said, here's what we do, and here's how we start new businesses. And then we said to them at the end, look, if you've got ideas for new businesses, you know your customers and your markets better than we do, come tell us. And in the next 2 weeks, we got 40 submissions from their teams for new business ideas. And these weren't just like an email jotted down. This is stuff that somebody had been thinking about, at their kitchen table at home after work. And what it really told us was, it's not that there's a lack of innovation or entrepreneurship within the organization. There's a lack of place for that to go and something to do with it. And we've started up our digital organization. We've got 5,000 software engineers, and this is a hard group to keep around, because when they get an idea that might work, they'll just quit and do it, right? And so we've had to create a place where they can say, look, why can't I do that within GE? Now, it's been hard. It's been really hard, and I'll just tell a quick story, but I probably shouldn't tell this one, but...
it's all Chatham House, don't worry. You're okay.
It doesn't go beyond the room. So we start up new businesses as well, and so the first one that we started up, we went through the process. We were doing it all on our own. We created the legal entity. We got the entrepreneur to come in and run the business. We brought in a couple of people in it, put in all the IP, and then we said, okay, we got to make payroll on Friday. And so we said, okay, we got to set up a bank account. Well, if your organization's anything like GE, to set up a bank account for a consolidated subsidiary is a policy about this thick. And it takes about 100 sign-offs and about a month and a half. And I think most of that's just reading the policy. and we said, what are we going to do? We've hired these people. We've got to make payroll. So we sent an associate across the street at lunchtime to Silicon Valley Bank, and he went into the branch and opened up a business account that afternoon. And we funded it, and we made payroll on Friday. Now, there was hell to pay afterwards, and rightly so, but we couldn't have done this without the support, again, of Jeff Immelt and Beth Comstock, because when people started to come down on us, we said, go talk to Jeff. But we've come at it from we will ask for forgiveness, not permission, kind of perspective. And I think that rubs off. When people see that you can actually still get stuff done, and you don't have to do it that way because you've done it for 100 years, I think that's the way you have to change the culture, from the bottom up. You can't force it down on people.
That's a great insight, thank you. And again, one of the things you were talking about, the moonshot, or the sort of catalyst program, I think you called it. If you're trying to think 15, 20 years ahead, how do you map that sort of longer term vision, whether it's Industry 4.0, against finding the people who can think about that and be prepared to, be there for 15, 20 years? Or how do you think about that whole sort of issue of finding the people who can fit into different roles?
Well, it's really interesting because, the businesses we've started up, or the engagement we've got with our startups, a lot of this has come from career employees at GE, and somebody who's, they said, look, I'm 45, I've got 3 kids, I've got a pension, I don't want to work 80 hours a week and eat ramen noodles for the next 5 years to see if this gets off the ground. So what we've done is we've engaged the businesses, we've set up an entrepreneur and EIR, entrepreneur in residence, basically a hired gun entrepreneur. And we've set up a database within GE to access these people. We've also gone out, and in the Catalyst example, we've engaged with the universities and where the research is being done. And we want to find the next Nobel Prize winners. We want to find the people who aren't, within a framework of here's what the business needs to look like. They're just thinking about the technology. We can bring in the entrepreneur, we can bring in the business side of it. We want them thinking about where the future is, and then we can bring that all back together. But again, to your previous question, it goes entirely to culture, because unless you can get the culture to shift and see more value from innovation and engaging and going external, GE was horrible at going external. We were not good at partnering. We were not good at, taking other ideas. Not built here syndrome was huge. We still take startups, and we introduce them to the business and the technologists, and they look at it and they go, yep, we could build that, or it's on our roadmap. And we said, well, yeah, you can, but it's going to take you 5 years and 5 times as much money to get to where they are today, and then you're going to figure that out, and you're going to buy them for 10 times what we can get in today just to get to where they are today. And that was the mentality for a while, and now I mentioned the switch flipped, and we're getting that engagement saying, show us companies that we can engage with that can be that sort of core that we can build off of. But it all starts from culture underneath it and embracing innovation.
Yeah, great stuff. I mean, I've got a couple more questions, but I'm thinking final 5 minutes. I'm sure there's some even better questions out on the floor. My experience of these types of things is people on the ground floor have better questions than I do, so I want to make sure you get the opportunity. So any questions? I think Neil's standing there, so you could point to people. Otherwise, I can ask a couple. There's one in a table over there.
Oh, there we are. One here.
And do say your name as well, please. That's very helpful.
Craig Haney from Communitech. Thanks, Dave. That was a great presentation.
Thank you.
When you got those 5 areas, I suspect you didn't start with all 5 as you sort of build out that vision. How did you start? Where was your sort of thin edge of the wedge? And then how did you build that strategy moving forward?
Yeah, we started with traditional venture capital and bringing in ideas. And I should say, I think about 80% of the group within GE Ventures, other than the licensing team, is actually financial VCs that we've brought into GE. So they're thinking about things in a different way, and not only were they going out and seeing the startups, as they got to know GE, they got to understand where the gaps in our businesses were. They got to understand, where the innovation in our space was going. And they were the ones who came to us with, let's start up a company. And because this was, the mentality that they came from, and it wasn't just, talk about it, what approvals do I need? They were like, okay, I'm going to do this on Friday. And so we thought, whoa, hold on here. We got to put some, parameters around this. This is a great idea. And when we started, talking about it internally, people got on board fast. And so we said, look, let's set up a group around this. And it took off beyond our wildest expectations. And so we had those two pieces of the puzzle. We then got the licensing team in, which really underpinned that as well as Catalyst. And then, so we looked at innovation from what we do in-house, and I think most of our companies have a large R&D shop, which probably over the past 5 years has switched from R to D. We do a lot of just development and not a lot of front-end research. And we said, okay, we are looking sort of immediately out in the venture capital space. We are looking sort of 5 to 7 to 10 years out in creating new businesses. What are the next things along that pathway? And so the natural next path was, well, what are going to be the startups of 10 years from now? And what spaces do we want to play in where there's really interesting research in universities and at hubs and that? And we've tacked things on, and it kind of worries me because we've done it largely with the same head count that we started with, and we're just getting more and more and more. And I would say we spend an inordinate amount of time internally. So I think we spend about half of our time talking to GE and about half of our time looking outwards. And that's because, we see 3,000 to 5,000 new companies a year that we filter through to make our investments. And it's having that access to what's going on out there. I mentioned we did the oil and gas day. And one of the things we did was we said, okay, here's where you're spending your money, and here's where you see the future. Here's where venture capital is spending their money. And why are you over here and venture capital over here? I'm not saying you're wrong, but let's figure out what they're seeing versus what you're seeing. And from that, we came, I think we shifted our investment focus a little bit. They shifted where they were thinking in terms of spending R&D dollars to align it a little better. And now we do a lot of that R&D through the venture capital investing. I kind of went off your question there for a little bit, but it was a tack-on effect over time. And I'm not sure what comes next, but it's getting to be, I can't make a bigger slide, so I'm not sure what we'll do.
That's really helpful. We've got time for one more, and it's going to be sort of Twitter length. Think Twitter length, Twitter answer.
Okay.
So I think there was a question over
Bumper
there.
sticker.
I think there was 2 questions. Otherwise, I will sort of ask the sort of a quick one, a sort of Twitter speed. A sort of chief investment officer, you think about venture, you think about healthy imagination. How do you tack on a whole portfolio? How do you portfolio manage that?
Look, I think when you're as big as GE, this is going to be longer than a Twitter answer. When you're as big as GE and you've got a decent amount of investment to spend, there's a tendency to want to spray and pray and just do a whole bunch of little things. And we've had to stop doing that. And we said, look, we are going to pick these themes. We are going to go after those themes hard. We are going to figure out the winners in those themes, and that's what we're going to invest in. We do about 25 new investments a year. It's very difficult to get alignment on what is strategic. When you're as big as GE, I joke that they could bring in Snapchat and say, oh, it's all about big data. We've got to do it. It's not strategic, though. But it's really from a portfolio perspective. It's just making sure we've got enough early stage, late stage, different industries. We want to be self-funding. We want to be returning capital to the parent, and the freedom that will open up within GE for what we can do and accomplish will be enormous. If I'm a 25% IRR, they will throw more capital at me than I know what to do with, and nobody will ask any questions. If I'm a 5% IRR, I better be able to tick some strategic boxes and answer the questions because I'm not earning my cost of capital. So there's a freedom aspect of that. We want to be returning capital. And so when we think about investments, we'd love to all be early stage and take a lot of moonshots, but we know we can't be there, so we do a lot of late stage and a lot of more direct impact on GE. So.
I think a lot of people miss that. It's that sense of our whole portfolio and diversification, and portfolio management.
That
so I think that's... Oh, you're good.
Oh, you got a question?
Oh.
Just about a month and a half ago, GE made an acquisition out of Vancouver, a company called BitStew,
yes.
In which, happily, BDC was an investor.
You're welcome.
Thank you, says our CEO. But we just wanted to understand, how what you do relates to the acquisition activity that happens, the corporate development function generally. Is it one and the same? Are they side by side? And how did you come to the BitStew decision?
So a lot of people, when they create a venture capital arm or we explain what we do, we are not M&A sourcing. We are not business development sourcing. We are going out there and looking for the best companies in the spaces where GE either plays or might play. And what that means is we don't need to get business unit buy-in for the investments we make. In fact, the less they like the investment, the more we like it. But there's two kind of types of investments we're making. One is taking cost out, and that's in supply chain, that is in additive manufacturing, 3D printing, and a lot of the digital work that we do. We call those our bleeding from the neck problems that we've got to solve now. And then the other pieces that we do are the long-term stuff. So if I ask our healthcare team, they say, I don't want you filling gaps. I can buy that. I want you thinking 5 to 10 years out. BitStew was a bleeding from the neck problem. That was a data ingestion engine, and we loved the technology that they had and a unique way to do it, and we thought this is going to be big. And we never thought about it as an acquisition target. We then introduced it to our digital team who went, holy mackerel, this is applicable for a whole bunch of different things, and got deeper and deeper. And it was the first acquisition of a portfolio company by the parent company. And so we were really thrilled with that. So.
That's great. Great question. So please join me in thank you, David.